Hi, I'm glad to be back. Um, Today we're going to talk about beneficiaries. In the last couple of episodes, anyway, in the last couple of videos, we talked about wills, and last time I talked about probate. I want to talk about beneficiaries. Um, all of these three are about things that people are not aware of, nor should they be, without talking to somebody who works in the field every day. Beneficiary designations are extraordinarily important. People will get things, and it seems sometimes people buy life insurance and nobody asks them who's going to be the beneficiary. Maybe that happens in work environments. I really don't know. And then something happens and we've got a probate asset. People name their children as beneficiaries, which is a great idea, noble, wise. However, children cannot inherit until they're 18 years old. So then if somebody dies and they're named beneficiaries, somebody's got to be the guardian of the money, whether it's a parent or not. If it's not a parent, it costs money to manage it. That can be easily avoided. People lose somebody, so their beneficiary dies and they don't think, nobody mentions to name the next level of beneficiaries. Easily done. I met with somebody this week. They've named, let's see, the gentleman has one of his daughters is co-owner on his checking account. He's a widower. And no contingent beneficiary, no secondary. So if he dies, the money belongs to the daughter. If she dies, the money belongs to him. However, if they're together and they both pass, they did not have any provision for who gets this next, which they're going to remedy by naming another daughter. But they didn't realize that, nor should they have realized that until we had a conversation. And then the reactions are, oh my gosh, I didn't know that. Why I just like that? And then people feel foolish. No reason to feel foolish. It's not something you should know. So beneficiary designations are something that I believe need two levels. You need a primary beneficiary, and then you need what they call a contingent. In the banking world, they call them payable on death. In the investment world, they call them transfer on death, but you need the contingent. So if you're single and you've named your mother your beneficiary, which happens often, or your father, whatever, you need somebody after that. In that case, because it's likely that that parent will die before you. So you want somebody after that person. If you've named, if you've got a joint account and you just think, of course, the other person's the beneficiary, you're right, except for if you both die, excuse me, Kat, if you both die, and then you've got nobody in place. So right now, I got a brand new client. His dad died in January of last year. His mother died in July of last year. His father had a small life insurance policy on which he named his mother beneficiary. Well, for whatever reason, the client, the son, did not even know about the account until the life insurance company notified him after his mother died, and now there's a probate asset. So had she known she was the beneficiary, she would have collected the money and there would have been no need to hire me. So the other thing with beneficiaries is you want people to know. I mean, if you trust them enough, they can't get anything until you pass, but you want them to know so that when you pass, they can let who's ever holding the policy, the investment, whatever, know. The first probate I handled 7.5 years ago was a woman who had passed, had about, I don't know, let's say $600,000 in her estate. $300,000 had beneficiary designations, $300,000 did not. Don't ask me why. She had them with different investment counselors. So the estate had to spend a lot of money getting the $300,000, and there was no need for it. Either the woman got bad advice, she didn't open the account until she was already not well. There's no reason to know how it happened, but it happened, and it was costly, and it was time consuming, and it was It wasn't the most complicated one I've handled, but it was pretty complicated and it could have been avoided. Beneficiary designations, they're essential. They are so essential. If you've got liquid assets, whether that's IRAs, retirement accounts that will, or retirements that you're collecting that will continue after you pass, if you've got any kind of thing that can be turned into cash, you want to be sure that those designations are in place. And if at any point you decide that you no longer want Joey to inherit from you for whatever reason, then you need to change those beneficiary designations because they supersede, that's a great word, they take precedence over a will. So if you name Debbie Baker, let's say, to receive your Chase Bank checking account, okay, but your Chase Bank checking account has Joe Smith as the beneficiary, Joe Smith gets it. It takes precedence over anything you've put in a will or anywhere else. You want to look at them. Some people have lots of accounts. Some people have only a couple. They're checking and savings. And people who keep small amounts of money don't even think about it. But that money could mean a lot to somebody who's grieving and has to pay you for your funeral or for flowers for your funeral or anything else. I just, I think it's one of my favorite conversations with prospective clients is, do you have this in order? And they go, well, no, but no, you need to have it in order. And you check them once in a while, and you need to be sure you still like those people well enough to leave them money. You want to be sure they're responsible with money. I mean, that happens too. If you've left something to a sibling who you find that is irresponsible with money, you may not want to leave them any money. You may want to do something else. It can get complex, but the biggest thing is to call your banks and your investment companies and find out if you have beneficiary designations. If you've not, then have them send you paperwork. If you do, ask them to please send you copies so you know who it is you've named. And again, the whole purpose of estate planning with whatever you do is to create your peace of mind. Your peace of mind, and then your loved one's peace of mind, because you've taken care of it and they don't have to think about it at a time of grief and mourning. They can just grieve, which is what I advise my clients when they've called me right after somebody died. So that's kind of the thinking for this morning, for today, whenever you're watching this. I am so grateful for anybody out there who watches, for any hints, value they get. I'm going to have a round to it one of these days, and I can't pass it out to you on video, but I can sure show it to you. Estate planning should be something you get around to. Don't put it off. You're not promised tomorrow. Have a great day. Like, comment, and share. Let me know if you've learned anything, and if I can be of any value, I'd be delighted to talk to you. It's always an honor. And I'll see you again. Thanks.